I really want to start getting invested, but I don't know how. I don't know where to start. And if you've ever asked yourself those questions, then stick around, because in today's video, I'm actually going to be going over how to start investing in 4 simple steps. The first step to actually start investing is to ask yourself, do I want to be a passive investor or an active investor? I'm going to dive deeper into that, but by you making this decision, it will help you make future decisions a lot easier and make them a lot simpler to actually make, because this is going to determine whether you invest in certain assets, whether you open up certain brokerage accounts, and basically how much research you actually have to do every single day. Being a passive investor means that you're actually going to have a portfolio that tracks or mirrors different indexes in the stock market. Indexes are basically just a big portfolio of stocks, and you're going to be investing in that. It's actually a lot less riskier than being an active investor, because you're actually spread across, your portfolio is diversified across hundreds, if not thousands of different stocks. For example, take the S&P 500. The S&P 500 is actually tracking the 500 biggest stocks in the US. And so if you want to invest in a S&P 500 index, that means you would just be investing in basically exactly what the S&P 500 has in it, which is the 500 biggest stocks. Now, there are a ton of different market indexes, but basically your portfolio will just mirror/track the indexes. And so, like I said, your risk is actually more minimal, because say some of the stocks inside your portfolio or that index goes down, well, other stocks could be going up. So you're actually basically getting the overall gain/loss of the actual overall market, and especially those stocks that are actually in the index. You've probably heard the saying before, don't put all your eggs in one basket. And the reason for this saying is because you want to diversify your portfolio. If all your eggs are in one basket and you drop your basket, most of the eggs are going to break, if not all. But if you put them in separate baskets and you only drop one basket, you still have all the other baskets full of eggs that aren't broken. And that's exactly what you're doing with this passive portfolio, is you're tracking indexes or investing in indexes that are actually tracking and mirroring the market. So this is a really, really good way to get into the market. It's less risky, and you don't have to do a ton of research, because the research is done for you, and like I said, it just mirrors the actual indexes that you're investing in. So it doesn't take a lot of research, and your average gain is probably going to be about 8% adjusted for inflation. If not 10, 12, 13, even 15% on really good years for some of these indexes. Now, the best way to actually be a passive investor is to invest in ETFs, or exchange traded funds, or index funds. They're a little bit different, and if you don't know what that means, I'll actually have a link to a video right here where I actually go over ETFs and index funds. But basically, you're just getting exposed to those indexes. Like I said, there's SPY, VOO, there's VTI. There's a bunch of different ETFs or index funds that you can actually invest in. By brokerage account, I'm meaning actually going to a Fidelity, a Vanguard, something like that, some website where you can actually go, you sign up, you put your bank account in, you transfer money, and then you actually go and buy these ETFs or index funds. If you don't want to actually do that, there's other simple ways that you can actually start investing right now from your phone. If you have an Apple iPhone or a Samsung Galaxy or whatever you're using, you can download the apps Robinhood, Webull. You can do so many different things just with these apps and actually invest in ETFs, stocks, and index funds. In these apps, you actually go through a questionnaire where it'll say, what's your age? What's your goals? What are you actually looking for? How risky are you? And then it'll actually just recommend you stocks, ETFs, and index funds to actually invest in. And the cool thing about it is you can start investing today just by a few clicks of a button. You can link your bank account and just transfer money over. You can even have it to where it automatically pulls a certain amount of money every single month from your paycheck transfers over to your Webull or Robinhood account. And then once it's in that account, it can actually automatically invest in an investment strategy that you set up. That is awesome because it makes it to where you're actually paying yourself first. Most people don't pay themselves first. They don't pay their future selves. They spend, and then if they have money left over at the end of the month, then they save it, then they invest it. But we want to start doing the exact opposite. The first thing we want to do is pay our future selves. That is the good thing about investing. You're paying your future selves to set yourself up for financial success in the future. And so by doing that, you're actually investing first. And then instead of going and buying COD points, new shoes, new clothes, going out to eat so much more and saying, oh yeah, I have it in the budget, you now create your budget off of what you've already spent for the month by investing. Now is time for the active approach, the active investing approach. And active investing is different from passive because in passive, you're doing it at a lower risk. You're not having to do as much research. It's a lot easier to actually just, passively invest, put the money in. It just goes in and you just sit back and you watch your gains over a long period of time. The active investment strategy is different. And it's going to be a lot more research because now you're actually going to dig into individual stocks. I'm talking the Apple stocks, the Metas, the Teslas, the Nvidias, every single stock. You're going to have to dig in to see if you actually like the stock and what you think of their actual financial futures. If you don't like the financial futures, then you're not going to want to invest in it because you don't think they're going to make money over time in the long run, actually increasing your investment. And so by being an active investor, you're going to have to do so much more research because you're going to be buying and selling a lot more and buying individual stocks, meaning you're putting more eggs in a single basket. If that stock were to crash or go bankrupt, you would lose a lot of eggs or money in this instance for your investment because it would all disappear with that one single stock. Instead of being exposed to 500 to 1,000 stocks from an index or an ETF where you're going to invest passively. So like I was saying, active investors, usually when people start out and they think about active investing, you're thinking Wolf of Wall Street, where you're doing penny stocks, you're making all this money super fast. But in reality, as an active investor, most people fail. And I'm not talking about just from the start. Most people just fail because they don't know what they're actually looking at. They might just read a post on Reddit, or they might just, see an article that's posted on a website saying, hey, this stock's gonna go up 1,000%, and there's really no information to actually back that up. And so most investors, they'll get into the Apples, they'll get into the Nvidias, they'll get into the Teslas, the Amazons, which are all, I think, good companies to invest in. But they don't actually know why they're investing it besides they are a big company that a lot of people are investing in. It's the companies I see on the news. It's the companies I see on Fox Business. It's the companies I see on a YouTube video. But they don't actually know the finances behind it. If I were to go to the average investor, the average active investor, and say, why did you invest in Amazon? Most would say, because I like Amazon. But that's not actually a good reason to invest in a company. And let me tell you why. When investing in individual stocks, you're going to want to look at their financial reports and their charts. You're going to want to look at their business models. You're going to want to stay ahead, read the news, read articles, do your own research, and not just rely on what other people are just telling you. I'm not saying that's a bad strategy because I've seen it work out for people, but you want to do your own research so that if you do fail, it's nobody's fault but your own. Because sometimes you will fail. And that is okay. That is the part of investing. You're going to win some, you're going to lose some. And most active investors do lose some, especially in the beginning. But like I said, you're going to want to do more research because you're putting more eggs into that basket. And usually active investors have a portfolio of about 10 to 20 stocks that they're actually looking at every single day to stay ahead of when they actually need to sell or buy a stock. And when you're an active investor, you could see some really, really big returns in a single year. But the downside is you could also see some really, really bad losses because you're not exposed to as much of the market like you would be in an index fund or an ETF. Personally, I like both. I like being able to set myself up for the future by passively investing, and then I basically have a separate portfolio that's just all active investing. That's where I'm getting my stocks. That's where I'm getting, I'm going through, I'm doing my research. When I see a stock like SoundHound and I'm like, hey, I think this has a lot of potential. When I see a stock like Spotify, or when I see a stock like Snowflake, or any of these companies that I actually like because I've looked at their business models, I like what their CEO is saying, I like what their quarterly reports are saying, I like what their financial meetings are saying, I like all these different things about the company, and when I actually have conviction to buy it because I believe in it, that is when I will start investing. I will look for a buying opportunity, or I'll set, a price limit on where I want to buy or where I want to sell, and that is actually active investing. Step number 2 to actually start investing is going to be focus on one asset class. When I say asset class, I'm talking about, do you want to invest in stocks? Do you want to invest in crypto? Do you want to invest in real estate? Whatever it is that you actually want to invest in, focus on that one thing first. I personally want to invest in real estate. I do 100%, but I'm not in that time period in my life to start buying another house and renting it out. I'm more focused on the stocks. I'm more focused on the crypto. And the reason that is because I focused on stocks for years and years and years. I learned them. I learned what a stock was. I know what a stock does. I know all these different things about stocks and how they work. Now I've actually swung to crypto because that's what I want to learn next. But what I'm saying is you need to focus on one first. It's very, very hard and complex, and your mind starts going all these places and stuff when you start trying to do all these different asset classes from the very start. It is very confusing because they all move completely different. Stocks are only open when the markets are open. They don't move as much. They're not as volatile unless you're doing penny stocks. Crypto is 24 hours, and the different regions and the different parts of the world are moving these cryptos up and down and up and down, and some are regulating them and some countries are not, and some are banning them and some are not, and it just gets really confusing because it's so much harder to keep up with crypto since it's actively moving non-stop, and it's so much more volatile. You might see a couple 100% swing in a single day, whereas in stocks, when you're really investing in the Apples and the Teslas and all these different companies, you might see an 8% gain. You might see a 10% gain in a single day, and that's pretty wild when it comes to stocks. I'm not saying stocks can't move like crypto, but crypto moves a lot more volatile than a stock. And then real estate, what's your barriers to entry? What's your money that you have to the side? How much can you invest? There's all these different questions that you have to answer for yourself that will determine which asset class is best for you, but you need to focus on one. For most people, that is starting with the stock market and actually figuring out what a stock is, how stock markets move, all those good questions. And if you don't know what that is, I actually have a video right here about what a stock is and how it actually works. Step number 3 to actually start investing is going to be opening up a brokerage account. Now, most people, I would say most people, because most people in my life who I've been around have been offered a 401k at least one part in their life, one part in their career, whatever that was, they've been offered a 401k. Now, 401ks are awesome. They are very good, in my opinion, because you're going to want to invest up to what the employer is matching. After you max that out, because it's basically free money from the employer that they are investing for you, where you're automatically getting a 100% return, after that, then you want to open up something else. What is that? It's most likely an IRA or an individual retirement account. You can do a Roth IRA, there's a bunch of them that I'm not going to get into in this video, but you can do a bunch of things, but you're going to want to open up a IRA. And the reason you're going to want to do this is because you get to actually have more control of your investment strategies. Like I said, a 401k is great, but they're super limited. Usually there's only a certain amount of things that you get to invest in, and it's super passive. And if that's all you want to invest in, cool. Put in probably 15%, 20% of your income every single month. Let your employer match that up to whatever they match, and you're going to make some money. You're going to be probably set off well in retirement. But if you want to actually be set up for financial freedom, where you're going to have so much money when you retire, or maybe just in the future, then you're going to want to set up an IRA. And the reason I say this is because you actually get to pick and choose what you want to invest in, and you can get a bigger return. It's a little bit more active. You actually start learning the markets instead of just saying, I know I have a 401k and I don't know what it's invested in, but it's invested in something. I know I'm getting a return. But an IRA will actually allow you to go in and pick and choose what ETFs, what index funds that you actually want to do and invest in. Before you open up a brokerage account, you need to read exactly what type of things you can invest in for that brokerage account. Some examples are going to be like Charles Schwab, Fidelity. Like I said earlier in this video, there's tons of different brokerage accounts that you can actually go and open, but that's step 3, is you actually have to open an account. Step 4 of how to actually start investing is going to be do what you can with what you have. It does not matter how much you actually have to start investing. Whatever it is, I don't care if it's $20. Start investing. The reason I say this is because, yeah, it might not be a lot, but you actually start and you take action and you get your feet wet and you get those nerves and that scared feeling when you first start investing that I don't know what I'm doing. The best way to learn is by doing, is to actually take action and start investing for yourselves. And who knows, maybe that $20 only turns into 25 or 30 or 35. Who knows what it turns into? But by you actually taking action, you're going to get more comfortable with the system. You're going to get a little bit less nervous when you buy a stock. And over time, that money will start growing. And as you add more money and you invest more money and you invest more money, that portfolio will start growing like a snowball, rolling down a hill. And the faster you get into the market, the more time that snowball has to continue to roll down the hill and actually build you compound interest, which is one of the biggest wonders of the world. It's the 8th wonder of the world. It's crazy. Compound interest is absolutely insane. And that is when your money is making money off of its own money. It just keeps building and building and building and building, and you get interest and you stack more cash in and you invest and more interest, and you just keep building this portfolio until it just becomes this massive snowball that's a force to be reckoned with, and it won't stop rolling. So what I am saying is just do what you can with what you have. Take $20, take $40, whatever it is, take $100. And every single month, you add more money to that portfolio, more money to that account, and you invest in something different, and you do the research, and you buy an ETF or you buy an index fund, and you just watch it grow. You will start getting confidence and wanting to build more, knowing that you're setting your future self up for success. Your first investment is the hardest one to make, but once it gets going, that to me is when it gets fun. That to me is when you're in the office, or you're at a ball game, or you're just hanging out with some friends, and you guys start talking about an investment or a company, and you actually know the finances behind the company or what the stock is doing, and you get to have those conversations. That to me is fun, because I have a ton of friends that invest. I have a ton of coworkers that invest. And it's just fun listening to them and being able to actually join in on the conversation, knowing that I know what I'm talking about when it comes to the knowledge and information that surrounds a company. Now, I have a question for you. What confuses you the most when it comes to investing? Put it down in the comment section, because I want to see what is confusing you guys and what is stopping you guys from starting. Who knows, maybe I'll make the next video about your question. Like, comment, and subscribe, guys, and share this with a family or a friend where you can empower them to maybe start investing themselves, and maybe that will set them up for financial success, all because you shared a link and they got to watch this video. Until then, remember, guys, you can do all things through Him that give you strength. Peace.